Hi, this is Keith Schneider, CEO of MarketGauge.com. This is July 7th, 2013. So please be sure to sign up for this newsletter, the video. Get it free on a weekly basis, and we cover, obviously a lot of the global macro view on the markets. So let's get right into it. The jobs report on Friday was pretty damn good. And as a result, the market moved from a what we call a weak warning phase because we closed above the rising 50-day moving average. Now, overall, right, you had a breakdown of this trend line here, which is a really good trend line, and you're now attempting a return move up to the top of the trend line. So one, we like to see at least a couple of days of action above that 50-day moving average to confirm a an upgrade or a change in a phase, and that certainly is still in play. So we got the first day after almost 2 weeks under this moving average. So you still have to deal with the fact, and we're in between a couple of different types of signals here. One is we had what we call a bearish engulfing pattern. It was also a glass ceiling because we made a new all-time high, closed at the bottom 25% of the range. This was clearly negative action, and we haven't really been able to close much above the meat of that action since that occurred. So we then proceeded to further correct as bonds really sold off and rates rose during this period as well. So that started to really hit the market. So at this point, I would really like to see a couple of more closes and a close above this trend line. That would be way beyond just a return move if we can get above this level here. We still obviously have to clear these levels, so we're definitely in this zone of no man's land between these two signals. You have to give the weight to the longer term trend, but there are other mitigating factors that we're going to get into. Let's talk about some of the market internals. As you can see, the McClellan oscillator, which is more of an intermediate, couple weeks to a month out, was sort of in the middle of the range, working off this buy signal here. You can see that we crossed above the minus 150 level, and since that happened, we've been working our way higher. Choppy, but still working our way higher. So we're certainly not at overbought levels. Plenty of room to move either way. On a shorter term basis, the 10-day advanced decline, sort of in a similar scenario, right smack dab in the middle of everything, so plenty of room to move either way. But we are clearly working off a oversold condition or a buy signal on a shorter term basis. Usually this is good for a couple days to a week at most. So we're still more in a positive mode here. Moving on to sentiment. We're looking at the VIX here. As you can see, we moved above the 200-day moving average. The 50-day crossed over the 200. But all of a sudden now, with this rally and the move back over that 50-day moving average, it's not surprising that the VIX is now in between signals, but the bearish tone to the market is definitely being neutralized. So we're right now we're closed just under the 200-day moving average. So sort of a mixed read, because you can see we sort of went into a bullish phase here where the 50-day is over the 200, and on this that would mean it would be bearish for the market, but now we're trading under it. So it's sort of a very mixed signal here. So net net, if you look at all the indicators, a little bit more positive on the market internals than it had been, but still somewhat muted, with the VIX still pointing to an overall negative signal, because we're over that, the 50s over that 200, but we're watching this closely. So the level or the bearish intensity has definitely worked itself off as we moved over the 50-day moving average in the key indices as well. So let's take a look at bonds. You can see bonds, we had this tremendous channel here. We broke down through this critical level decisively on Friday. So definitely you can see that this is topping action. If you go back to the weekly charts, this is just a chart on the close. We actually closed under the 200-week moving average, a definite deterioration for bonds, meaning higher rates are still gathering acceleration to persist this trend. Clearly, the top is in rates on a longer term basis. This whole pattern now is really a truly confirmed head and shoulders top that has taken, almost almost just about 3 years to form and to break down. And as you can see, we're bouncing right off of this. We're not even bouncing. We're hitting the this 200-week moving average. Support under it, actual support, comes in around 105. So it'll be really interesting to see how much additional steam. Without the support here at 105, the next level of support is all the way down to the 97 level. That would be, another quite a dramatic move in rates here. So let's see if we can hold in this area here. Let's going back to the chart. We are approaching oversold levels. We're only 2 on the daily RSI. You got a lot more to work off on the weekly. So things can certainly get more oversold. Meanwhile, this looks like it's really got some more legs to the downside before we find some support. So you're looking at least another 2 to 3 potential points or handles in this on the daily chart here, that you're talking probably, like we said, down to the 104, 105 level. So that's still a nice move to the downside. Now, since we were talking about the overall worldwide indices, let's take a look at some of the other stock markets, because the divergence is pretty glaring. All right, Germany is clearly one of the leading economies in Europe, not nearly in the type of trouble from a fiscal standpoint or productivity standpoint that some of the other economies are. But you can see we're dealing with a completely different picture than the United States. This is the German ETF. The German ETF has broke down, barely rallied on Friday. It broke down under the 200-day, degraded in a phase change. Also, you can see 50-day moving average moving its slope to the downside. So this does not bode well. So one of the things that's really curious is the strength of the U.S. market relative to some of the other economies here and some of the other stock markets. Let's take a look at RSX. This is Russia. Russia, you can see, is in a bearish phase. Now, we did have a little bit of a bounce off the lows. You've got a potential triple bottom here. May take longer to form, but overall, until this 50-day moving average really starts to turn around, you're definitely seeing some trouble for the Russian equity market. So you got Germany, Russia. Let's take a look at Turkey. right? Unrest in Turkey calling into question the Islamic leaning power that be now. And so, with the uprising in Turkey as well, uh, you can see the type of pressure that's putting on this market. So, the economic miracle of a sort of Islamic, new Islamic emerging state is definitely now being called into question as well. So, moving on, let's go to Egypt. EGPT, I believe, is the symbol. And interestingly enough, a really nice pop, right? We went from, this is a bad print here, we went from a low of about 36. Let me verify that. Yeah, just about 36, all the way back up to 44. So that is a monster rally. And you can see Egypt is actually, with this upgrade now, you got two closes above the 50-day moving average. Would like to see that slope turn up. But what it's telling you that the markets like what is happening in Egypt, even with the prospect of, the unrest between the Islamic parties and the newly empowered military and the more secular parties in Egypt. So interesting to see how this political event has played out. The markets are certainly responding to these events in a much more positive way. So obviously, the better potential prospects, at least that's what the market's thinking right now. Obviously, on a shorter term basis, yes, this might be the bottom. On the other hand, on a short term basis, we've got a 99 RSI that's running pretty rich. But this is very interesting action in face of all the unrest that has occurred. If we take a look, let's take a look at a little bit longer term. So, yeah, so basically, interestingly enough, the markets basically tested the lows since the overthrow of Mubarak. We reached those lows and bounced off it nicely. So real potential long-term double bottom. Certainly if things start to unravel a little bit more and the Islamic Party there or the Muslim Brotherhood takes it to the streets, this thing could reverse. But for now, it looks like there is a real potential bottom in the Egyptian market. And I think if that is the case and this continues to improve and hold, that could bode well overall for the global economy. Let's take a look at one other, what's going on in South America as well, EWZ, which is Brazil. And you can see that the Brazilian stock market, also unrest in Brazil as well, has really gotten hit hard too. I mean, it's just in the last month or so, we've gone from 55 to 41. That's a good 15% drop or thereabouts, and no signs of really relenting. Yesterday's action, Friday's action, potential hammer. Not all excited about this because we did close on new all-time lows. Let's see if there's a pattern forming here. If we can gap up tomorrow or on Monday, we could see a potential reversal here. But overall, this trend is strongly intact. So, what do we get out of all this? U.S. markets, I mean, let's go back to the SPY. And you can see that the spiders and the U.S. market is really outperforming just about every other stock market in the world. So that's of interest. right? We looked at the bonds, so it's going up in the face of the bonds. All, again, very interesting points. So one other thing I wanted to point out, IWM, which is an index of the Russell 2000. So it's more of a mid to smaller cap index. And whenever the smaller caps do well, that is generally a good sign for the overall market. And interesting, you've got a really great pattern here, where we actually closed on Friday through the trend line here. So it's sort of a flagging pattern, and it looks like we're breaking out. So if this is any indication, which it normally is, of the leading index, I mean the smaller caps leading, is a good sign. So it's really interesting to see just how mixed things are, right? Global markets lagging US, some of it by an enormously wide margin. We're going up in the face of higher rates, and yet small cap stocks are leading the rally up. So, this is certainly of interest. All right, to follow how we're playing all this stuff on a tactical basis, there are two choices. You can sign up for our day trading room, or Mish's services, which are more swing trades and mini swing trades, which vary from a couple days to several weeks in duration. Have a great weekend, or what's left of it, and see you next week.